I'm Jacob Reeves. I'm a senior tax manager here in our Newport News office, and today we are going to be going over some individual and estate provisions from the One Big Beautiful Bill.
Hi, welcome. My name is Marie Wimmer. I'm a senior tax manager out of the Roanoke office for Brown Edwards. The first of the provisions that we'll be talking about will seem very similar because we have been using these since the Tax Cut and Jobs Act that came into play in 2017. So what the One Big Beautiful Bill, which I'll refer to as OB3, did was extend a lot of those provisions. The first of which you'll see on the slide here are the individual tax rates. These are now permanent. Now the dollar thresholds within these brackets will be indexed for inflation. The other provision made permanent are the increased standard deductions. So you'll see as example for 2025, the married filing joint standard deduction is now $31,500. The personal exemption was not allowed under TCJA, and now that is permanently repealed. Also, the limitations of casualty losses that we have been dealing with in 2017 from TCJA are now permanent, although there are some exclusions available.
Yeah, so I think especially the summary from this first slide, when a lot of clients have been asking, what did they do to change that's going to impact me? And a lot of it is crisis averted. We're going to keep operating like we have been for the past few years.
Right, we get to continue with what we're used to for some of these provisions. The loan cap of $750,000 is now permanent under OB3 for the mortgage interest deduction. But we are allowed to add the deduction for mortgage insurance premiums to that mortgage interest. The home equity indebtedness is now permanent. We haven't used that since TCJA. And we've had limited availability of moving expenses, only for the exceptions of armed forces. So all of that is now permanent under OB3. Same with the student loan discharge income. That is an exclusion from income as long as it was discharged on account of death or disability.
Yeah, so a couple things with this. I think it's interesting that most of this was just making TCJ permanent on a lot of these situations, but that mortgage insurance premiums being added is actually a reversion to the pre-tax reform of 2017. So we're actually kind of going back to an older law from that perspective. And then that extension on excluding gross income, that's actually more of a limitation that now we're excluding more types of discharge from being excluded from income. So it's really narrowed it down to only certain types.